investors, and welcome to Stocks to Watch. So, with gold surging to decade level highs and silver really blasting past expectations, the precious metals story is certainly becoming impossible to ignore. And to break it all down, we have one of the sharpest minds in this space, Don Durrett of goldstockdata.com. Don, always great to have you with us.
Yeah, Ashley, great to be back.
Yes, excited for this conversation. So let's get right to it. Gold up 50 to 60%, one of the biggest runs in decades. So would you say this is a freak spike or the new normal?
Kind of neither.
Okay.
It's definitely a historic, it's epic. It's gold is telling the truth. The stock market isn't. This isn't what we're supposed to see. Silver's not supposed to be up 100% in 1 year. What's silver doing up 100%? What's going on here? Why is gold up 60%? What in the stock market's at an all-time high. Today's at 6,800. All-time high 69. So it's like what's happening here? It's kind of a new normal, but it isn't. It's a different normal. Gold is definitely transitioning, and I don't know how long it's going to last, but it's transitioning away from a metal that was kind of ignored, if you will, to a large extent, not necessary. Now it's kind of moving to the forefront, and nobody's really asking why, which is kind of mind-blowing. I mean, I watch CNBC when I stretch in the morning, and all they do is focus on bullishness. They never talk about gold. They never talk about the reason why gold's up, the reason why the average investor thinks that we're in a bubble. They never talk about these things. They just pretend that everything's great. This morning they were talking about growth accelerating. We got growth is accelerating.
Don, they need to have you on the show. You're the expert. You can explain the why.
We don't have people like me on. I won't go on. I won't. I'm not going to do mainstream media. And because it's kind of a controlled outlet, I mean, anybody that goes on there that says anything negative kind of gets, whiplash or whatever. It's like, no, I'd rather stay on the down low. But back to answer the question, is this a new normal or it's going to fade? Well, it's not going to fade. Not anytime soon. I keep hearing people talk about, silver's at the top here, gold's going to roll over. It's like, this is just starting. What are these people talking about? I mean, it's like a comedy show when they talk about we're topping out here. It just started. Gold broke out in March of 24 at 2,000. So we've doubled in 2 years. So up 1,000, up another 1,000. And next year we'll go up another 1,000. And then it took about a year after that doubling, after it broke out, gold went above 2,000. Nobody really believed it. It was like, because the miners didn't do anything. The miners couldn't break out in 24. They didn't break out until a year later, April of 25. April of 25 is when the miners finally, you got above 3,000 on gold. So it took a year later, another 1,000, we're up 3,000. And then finally the miners decided, okay, it's time to go. That was this year. And everything's been absolutely ripping this year. Newmont was up over 100, I think 140% year to date. So everything kind of turned this year. And then silver joined the party in August. But I'm kind of switching topics on you. We were talking about the new normal. I firmly believe that gold's going higher because the U.S. economy is going lower. That's what this whole story is about. I was listening to Dave Collum over the weekend, and it was a really good interview with Sword Financial, and he talked about how he believes the market's 200% overvalued, and that you are going back to the mean. We're going back, and the people that are in the market right now have no idea what's coming. Everybody is reading this wrong, and I agree with him completely. He also said that anybody that says that this isn't a bubble is lying and they couldn't pass a lie detector test. I thought that was a great quote. Nobody could pass a lie detector test and say that this isn't a bubble. We're in a hopium phase. We're literally just hoping that this market goes higher. The fundamentals are terrible.
So, hoping that it goes higher. So, what's your recommendation? How should investors play this? What's happening right now? Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos.
I like the Hugh Henry quote. I recommend that they panic early. Don't wait for the crash. Panic early. Panic now. And so, what does panic mean? Panic means figure out a way to hold your value, your assets. Figure that plan out, because I think the stock market is going to just brutally crash once it starts over. When you get the end of a bubble, the end of a bull market, they tend to be very prolonged. They don't last a year or 2 years. They tend, you go back, look at history, just look at bear markets versus bull markets. We've actually had more bear markets since I think this decade, last century. No, going forward, last century to today, we've actually had more bear markets than bull markets. They last 5-10 years. The last one we had, the last brutal bear market, we came out of 2000 and 2001. We had the dot-com bubble burst. Then you had, right after, we had a recession with 9/11. The NASDAQ didn't get up back to a new high until 2013. The S&P was basically flatlined for a decade. So you basically had that big run from 1982 to 2000, 18 years. And then you had a bear market for a decade. So now we've had a bull market for 15 years. Get ready for a bear market for 5 to 10. And I think it's going to be absolutely brutal. So you won't be able to recover, if you will, in using stocks. And I think bonds are going to be brutal too because of inflation. Bonds do not do well in inflation. And so where are you going to hide? So you can see it right above me. I have two words, gold. Gold and silver are going to be good places to hide, I believe. But it's going to be difficult for investors to decide what to do with their investments. Very difficult decisions people are going to have to make. But I think this bull market is going to end. The only question is when. I think it could be weeks. It's going to be weeks or months, but we're nearing the end here. It's becoming pretty obvious to me that we're nearing the end, because if you look at some important data points, the number of weeks that it requires right now, if you lose your job, the number of weeks that you requires. Historically, when you're in a strong economy where GDP is growing at 3%, it usually takes 12 weeks. Right now, we're at 24 weeks, double, which is basically recessionary levels. The housing market is doing things that usually only occur during a recession. So we're seeing recessionary things going on. And we've seen weakening. Employment has basically fallen out of bed since late spring of last year. I don't see that picking up speed. It usually, when things start to slow, they tend to continue to slow. They don't tend to just turn around and go up. That the employment jobs market usually doesn't work that way. So things are slowing. And here's another data point for you. If you, I could be wrong, but this is what Dave Collins said. He said that if you take all of the CapEx spending from all the data centers, if you subtract all that out, you'd have negative GDP. So, and who's really benefiting from that CapEx spending? A few construction workers, right? And the material, some companies that give them the materials to build them, but the average consumer, no benefit at all. So you're 4% GDP, but nobody's really benefit. And one final point I'll use is the PMI data, the manufacturing data. It's been negative for over a year, month over month. I mean, every single month, sub 50. So where's the, the growth? Isn't it's not there. And so that's why I said I always say, kind of the clock's ticking. We don't have much long. I don't think we have much longer to go.
So yeah, and as you say that, we're nearing the end. So say for an investor who is new to this, or an investor that really doesn't know much about gold and silver. I mean, I'm talking about somebody like, could be, say, somebody who's just getting into it for the first time. What do they do if we're nearing the end? You've got silver up nearly 100%. Obviously gold, what you're talking about. So I actually have a two-part question. It's what should they do right now if we are nearing the end? And then I think it would be interesting to understand how you split gold versus silver in your portfolio.
Well, first thing they can do is start reading. Right now, like we have AI. AI is a beautiful tool. It's like you can go on, there's lots of different AI prompts. A lot of them are free for several questions. And you can just ask, what assets should I own in, a high risk situation? What are the risk off assets? What are my options? AI is going to give you a lot of different choices. And you need to just do your homework and what do you do in risk off? And then you have to decide how much you're going to allocate to each of these risk off areas. So yeah, just do some homework and kind of figure it out. I yeah, I actually think that the professionals, if you will, the people that actually manage money, I think that the majority of them play in a world that's very it's ironic as heck because you're actually taught as an investment professional to tell your clients that the past doesn't necessarily reflect the future. That's kind of something you're supposed to tell them this. The past doesn't necessarily reflect the future, but then that's how they do it.
Yes.
It's exactly how they do it, and that's the problem is that you get stuck. It's all called the recency bias. And everybody's investing based on the last 5, 10 years, expecting that to continue.
Mm-hmm.
And so you need to really do it on your own and kind of think outside the box because everybody else is, the investments are like, for instance, the so-called 60-40, right? 60% stocks, 40% bonds, right? That's the standard mantra. I mean, it's all based on the past. The past is going to keep continue. But we can see since 2016 that something fundamentally is broken. Everybody knows this. Everybody knows the world's turned upside down. We live in clown world now, where our politicians lie and get away with it. Right? It's like the media lies and gets away with it, and we know they're lying, and we know they're getting away with it. We live in clown. Nothing makes sense anymore, and you're going to believe that the past is going to reflect the future, right? You can't, and so I mean that's my advice is that don't now it actually means something when when people say the past doesn't necessarily reflect the future. Today, it really actually means something, right?
Right.
If you go back in the last 50 years, it didn't really mean anything because the future kept reflecting the past. But now that's all turned, it's all changed, and so me personally, I'm a bit of a visionary. I knew what's happening today. I pretty much predicted, figured out on my own, kind of knew was coming. So I'm an unusual investor. I invest really more by beliefs than historical norms, what's happening in the past. Mm-hmm. I just firmly believe that the U.S. economy cannot live on debt and that it's a fait accompli that all hell is going to basically, occur in the financial world, and the financial system, and the winner's gold. I've been doing this for 20 plus years, and that's been my prognosis. So I don't Absolutely. I don't care about the past that much. I do look at it historically because I look at history and I look at how things are kind of leaning my way, if you will. But more than anything, I base it on a thesis of an outcome. Now,
Mm-hmm.
you're not supposed to invest this way. And it's not really investing, it's speculating.
Mm-hmm.
And when I started doing this, I was really the only newsletter writer, analyst out there that was doing it. When I created my website in 2012, I was using $2,000 gold or $2,500 gold and $100 silver. I think $2,500 gold and $100 silver. And back then, when we weren't even anywhere close to $100 silver, I just upped it to $150. That's what I'm using now for analysts for silver. But I've been using $100 silver for a long time. So all my investments are all based on $100 silver. If you go back to 2012, you're like, what the heck are you doing? You're nuts. Going, watch what happens. Now, so I'm a speculator. I speculate on my expectation. So right now I'm expecting $6,000 gold, $150 silver, and I invest for that expectation. It's not investing, it's speculating.
Mm-hmm.
But the one thing that I tell people in my book, and I tweet this out, I say to everybody should have 1,000 ounces of silver.
Mm-hmm.
Now it's starting to get a little more expensive. It's $50,000. Back when I was talking about it, it was 20,000. Now it's 50,000.
Right.
But everybody should have 1,000 ounces of silver,
Huh.
physical silver, not paper silver, physical that you own, you hold in your hand. 1,000. That's the starting point. Get your 1,000 ounces of silver, and then decide: do I need some gold to go with this? Do I need more silver? Once you become a stacker, but do the 1,000. Everybody should have 1,000 ounces of silver. That's your piggy bank. Now, why? The reason why is because you can't trust the banking system. To this day, we've always basically believed what?
I'm writing that
Oh,
question down.
we've always believed that the money in the bank will be there.
Mm.
That we go to buy our groceries. Don't worry, our debit card and our credit card, everything, all that is good. It's always gonna work. Nothing to worry about. Don't put your tin foil hat on. If you have that 1,000 ounces of silver, it's your insurance. They always talk about gold, as a hedge, as insurance, and gold works too. But I think that silver is going to outperform gold by at least 2 to 1. So if it's going to outperform by 2 to 1, you're basically buying gold at half price. If you buy silver, you're buying gold at half price. So why buy gold? So that's why I say stack the silver first and then decide, man, okay, I have some silver, now I'll stack some gold on top of it.
Really appreciate that. That's really very interesting. I actually was writing it down because great recommendation, and not go big first, just have something where you have the security of the silver and then move on to the gold if you're comfortable with that. So, Don, as we step into 2026, what would you say is on your radar, and, any catalysts you're watching in the metals market right now?
So a couple main themes basically for me. The first one is we're running out of time to build our portfolios. We saw, most of I tweeted out this week, I call them the Mag 7 miners, the 7 majors. And those 7 majors this year to date, are up 184%. 7 stocks. I'll repeat that, 184%. 3 of them were up over 200%. And so that, and the crazy part is they're still cheap. They're up 184%, they're still cheap.
Right.
But once they double again, then they won't be cheap. So we're nearing the end of when you can really take advantage of this bull market in gold and silver miners, which I think began in August, which was we're like 3 months into it. What I mean by it began in August is that it shifted gears. It kind of gave you confirmation. We knew the people that were early, but everybody's kind of jumping on the train in August, if you will. It became very apparent that things were really ripping. Most of those 184% gains happened from August through October. These stocks really run, when they really run hard, run fast. So one of the things going into this year for me is to help people to find stocks before this market matures. So right now, Newmont's trading about a 9 multiple. I think it's going to go get into the 20s before this is over. So it'll mature. I think Newmont is valued around $90. It's about 50% below where it should be valued based on its free cash flow. It shouldn't be at a 9 multiple. It should be out of 15 because it's a market leader. So it's valued about half price right now. But once it gets to 15, it'll basically double. I think it's somewhere around $200 when Newmont gets to around 200. At that point, that's kind of when the train left the station. You're kind of too late now. You're just, you're not going to get the big alpha. You're kind of late to the game. So we have about, I don't know how many more months we have left of buying stocks on sale, buying stocks, like right now, Newmont's, all these stocks are trading about 50%, I think, of their true value based on the current margins. And I think those margins are actually going to expand, which is kind of crazy because the margins right now average around $1,700 an ounce. I think they're going to go over 2,000 before this bull market, gets to the top. So that's theme number one is make sure to help, I'm my personal self, I want to add a few more stocks before, it's too late and help people. I do Saturday Night Live podcast. I'm trying to help as many people as I can to, build their portfolios before this thing gets mature. You want to get in early. We're still early. The other theme I'm looking at is the S&P 500. The S&P 500 is the most important chart for gold and silver. I believe that the miners right now and gold are trapped behind the S&P because the S&P is at an all-time high. The miners are not going to take off and go ahead of the S&P. If the S&P keeps trending higher, gold and silver will keep trending higher. Conversely, if the S&P goes down, so will gold and silver miners. So they've been correlated since February, March of 24. So, we're coming up here on 2 years correlation. And so that correlation is very strong. We're not going to get a decoupling at the top, I don't believe. A decoupling at the top, what I mean is like right now, we're kind of at the top. Both are near all-time highs. So gold would keep going up from here, and the miners would go down. The S&P would go down from here. The probability of that is very low, in my opinion. It could happen, but it's low. So what's more likely to happen is you'll get what I think is going to happen this year, and this is front and center for me. The S&P is the most important chart. Keep your eye on that. Is the S&P crashing? And when the S&P crashes, the miners will go down. The only question is, how low does gold go? I think it's going to go below 3,900. It's currently about 4,200. I think it'll go below 39, which is, I think that's easy. So the question is, the range I think is going to be somewhere between 36 and 39. I do think 3,600 will hold. That's kind of my floor. But the closer it gets to 3,600, the more the miners will get whacked. But I think this is going to be an opportunity, a buying opportunity. Yep. But that's kind of what I'm waiting for. I'm waiting for that S&P to roll over. And there's so many things that could trigger it. But something's going to trigger the market finally dying, if you will. And this is a perfect time for it to happen because everybody's so bullish. Everybody thinks everything's fine. It's not. It's a train wreck, and the train's coming off the tracks.
Always razor sharp insight. I just love talking to you, Don. So fun, so insightful, so much information. I feel like obviously longtime investors and even new investors learn so much from these interviews and just from sitting down and talking to you. One last question. So you talked about your Saturday night podcast. Is that on goldstockdata.com or where can folks tune in? Get there.
Yeah, if they're subscribed to my website, then they can.
Okay, good. Perfect. And that's goldstockdata.com. Don Durrett,
Yes.
Always a pleasure. Thank you so much for joining us. And thank you all investors for watching Stocks to Watch. See you soon, Don.
All right, thanks.